Good morning, good day, good evening, everybody, depending on where you're located. And welcome to this discussion panel, which I believe is the final one at this year's IAIS annual conference, entitled Innovation, which will be about artificial intelligence, so AI more shortly, and machine learning, governance, and ethics. My name is Laurent Dupont, and I work at the ACPR's FinTech Innovation Hub as a lead data scientist, so at the French Supervision Authority for the financial sector. And I will act as moderator for this panel together with Nick Silk, who is technical specialist in the Insurance Analytics Division at the PRA Bank of England in the UK. So as said, this panel will focus on artificial intelligence and machine learning, although we can also probably throw data analytics into the mix. Why choose this topic? Well, it could be argued that even though the risks associated to AI are probably, unfortunately, of a less systemic proportion, it is just as timely as other panels of this annual conference, like climate scenario analysis or pandemic risk you might have attended. Indeed, the applications in insurance are increasingly common, both across business lines and along the value chain, be it in product development, pricing, underwriting, or in claims management, including fraud prevention. So innovation has started to happen, and it still happens constantly. And regulation is trying to follow suit, and we'll see that some trends tend to emerge either as a cross-sectoral AI regulation or insurance-specific guidelines. All of this may raise questions as to whether and how insurers' internal governance processes should be adapted to AI, and also how those new AI-based systems should be supervised by authorities, such as those represented at IAIS. So we'll try to make you see things a bit more clearly today. And we have planned to articulate this panel around 3 sections. Each will start with an audience poll question on which you may all give your opinion, and that will provide a starting point for the discussion among panelists. In the first section, we'll start by discussing what barriers to adoption there may exist for AI in insurance business cases. Then in a second session, the panelists will discuss supervisory principles and regulatory frameworks appropriate for these technologies, and whether there is possibly an emerging convergence across those frameworks. And the third and last section will consider how those principles and frameworks could address inherent biases, both in AI and ML models and in the underlying data in terms of diversity, equity, and inclusion issues. I should also mention before starting that this discussion will draw on work done at the IAIS by the AI and ML subgroup of the FinTech Forum, a group which represents a wide variety of jurisdictions as well, and in which Nick and I are acting as co-leads, hence the logical way to co-moderating this panel today. And our subgroup, incidentally, will most likely publish a report on the outcomes of our collective work in the weeks following this conference. So let me now introduce the panelists, and it's really a pleasure to have assembled today such a diverse panel of experts, both geographically speaking and in terms of industry and regulatory expertise. So today we have John Gottfried, who is Insurance Commissioner for North Dakota in the US. Commissioner Gottfried, an immense thank you for you to have accepted this invitation to speak, especially at such an early hour of your day. Then we have Sean Milley, who is founder at Bright Blue Hair, also innovation and customer lead for Green Kite, and coaching director at EDII, which I believe does education and development for regulated markets. So thank you, Sean, as well. Then I believe he has not joined us yet. Yes, I think he has. William Morrison is head of data science and analytics at Royal London, which is the largest mutual life insurance and pensions company in the UK. Welcome, William. And we have as well Leslie Teo, who is Managing Director for Data and Strategic Transformation at Great Eastern Life Insurer in Singapore. And a particular thank you as well, Leslie, since you're the one who needs to be connected late into your night for this panel. So thanks again for having accepted the invitation. And without further ado, I will leave the floor to Nick to start us off with the first session on the potential barriers to adoption of AI in insurance.
Great. Many thanks, Laurent, and many thanks also to our expert panelists and to everyone in the audience for dialing in. It should be an interesting discussion. So just a quick note, I'm going to refer to AI throughout just for convenience as a shorthand. as Lauren referred to, as part of the IAIS, we've been looking at, as a subgroup, AI and machine learning across the insurance markets. We've had the advantage of doing it across a range of geographies, looking at both general and life insurance. And as Lauren mentioned, there's a wide range of uses that these technologies can be put to, and insurers are implementing them on quite a widespread scale in areas like claims management, underwriting, distribution, etc. But it was also really clear from our discussions with insurers that these aren't obviously simple techniques to implement. There are real challenges and sort of minimums you need to meet before you can implement AI or machine learning effectively. Our panel are going to talk about some of those in more detail, but just as a starting point, I'll mention a couple. So clearly you need experienced data scientists who understand how to build, validate, and maintain these models. You need an awful lot of data to build and validate the models too, and to maintain them. And you need good IT, which hasn't always been a strong suit for the insurance industry, certainly not in my home country, the UK. That's often been a challenge that insurers have faced. And it costs a lot of money. So you need to get buy-in from your board, your management, that this is worth doing. But I guess a question we should ask ourselves is, why do we care as regulators? So I guess a few points. One, I think as a general point, it's worth us understanding the market. So we want to engage with insurers, know what's bothering them, what's taking their time. But also, I think if these barriers aren't addressed adequately and firms feel pressure to implement these techniques, you could see risks materialize in a number of ways. So on the one side, you can have financial losses. If, for example, you implement a claims or underwriting solution that's not completely developed, or the data's not quite been validated correctly. But also, and we'll come on to this in more detail in panel 3, there are big conduct risks, which are very hard to define, relating to bias, discrimination, and ethics, which we'll talk about in more depth. So as Laurel mentioned, we're going to ask you for your opinions in the audience about what the biggest barriers are. And so I think our technical team will shortly be launching this panel. And that will run in the background for, I think, sort of 5 minutes. And then once we've had a few comments from our panel, we'll bring it back in and get some comments from them about their views and whether they agree with the views that you share with us. So that should be kicking off, I think, now. So without further ado, I think you've heard enough from me now. I'd like to hand over to our panel. I think first, Leslie, it'd be very interesting from an insurer's point of view to get your thoughts on, in your organisation, what are the biggest, I guess, challenges you've faced, and also, I guess, what are the drivers that make you try and overcome those challenges?
Thanks, Nick, and greetings, everyone, wherever you are. Maybe I start by just broadening the discussion a little bit and making the point that AI, and technology more generally are just tools, right? They're not in itself, at least maybe because I'm a human, I don't think they exist for their own sake. So the biggest impediment for me in observing the use of AI technology, data science, actually goes back to the core or the business or the use case, these are buzzwords, of the business. And here maybe I give two specific examples, right? One is a very general example. For us, we are a composite insurer, but largely a life, very large in two regions, Singapore and Malaysia. And the challenge for AI and data is that the way we've done this with a 100-year-old company is pretty much, if I were to simplify, a manufacturer, right? We are good at manufacturing financial contracts. We know how to do that. We know how to work in agency force to sell that financial contracts. And now comes along a technology that's saying you can't just be a manufacturer. You got to talk about consumer experience. You have to give them not just service, you have to give them a wonderful experience. And frankly, that's really alien, right? We don't know how to deal with that. And we're not even sure if that's we need to be that, right? So many of the use cases, many of the applicability of AI or data science it's not so apparent from a, you could say, conventional lens. I mean, we do know we do need to change. We at the same time, at least for many insurers in Asia, pressures that European and North American insurers have faced for many years are not apparent, right? We are a growing market. The old agency force still works. So I guess the biggest thing I would like to say is this business case. A smaller example of that business case would be, people say to me, and so I thought too before I join an insurance company, that we have a lot of data. We can price risk. Wow, we can do wonderful things, right? Then comes along the reality of the value chain, the role of the reinsurers, and the risk appetite one might have over really long horizons. So essentially, you might have the most wonderful, precise model that gives you mortality or health predictions, but if your reinsurer doesn't accept it, there's no business case. Maybe next to legacy, the business case, I guess for me, as a practitioner, the next challenge would be legacy tech. I think, Nick, you mentioned that. Expertise and tech, right? We are not a tech company per se. We have a lot of legacy. But at the same time, we are very afraid of the modern cloud and other technologies that are essentially in third-party hands, right? And that's a very difficult kind of balancing act to go, because we can use some of this, but we are very worried about control, security, and ability to keep the risk under control. I'll stop there.
Thank you very much for that, Leslie. That's really interesting. I think one of the points you raised in particular around giving customers a good experience and how that's a development for insurers, I'm going to refer that back to Sean a bit later in the discussion, actually. I'm going to park that for now. But before we move on to further contributions, I think the poll is now ready, so we can now have a look at what the audience think are the biggest barriers to implementation. So can that come up? Fantastic. Right. I'm just seeing if I can actually read this. So I'm having some slight tech issues. I'm logging into this on my phone, but I can see it. Okay, wow. So it looks like there's a split. There's a split between people thinking all of the things on the list are very important, but actually expertise comes up as absolutely critical. I don't know if that's a UK specific perspective or that's something that's worldwide. It is something that's reflected when I've spoken to the market. So that's really, really interesting. Interesting that cost is not seen as a big deal. Ethical concerns come down really, really low as an issue, which surprises me, I think, actually. That's excellent. So thanks again, Leslie. I think just sticking with the kind of industry view for now, Gwilym, I'd be really interested to get your perspectives. I mean, particularly maybe just picking up on that point around the shift to providing, I'm not saying insurers don't provide a good customer experience, but this idea of a move towards that being such a focus, and that maybe AI can, in some cases, enable that and be a good thing.
Yeah, so I certainly agree with that, and I think there is a lot of potential to use AI to streamline and improve customer experiences. And I think certainly in the UK industry sector, I think customer experience is going to be a key battleground, a key competitive battleground over the next few years. I think historically, probably in keeping with a lot of financial services firms in the UK, we've tended to compete on product. And I think that's now coming to an end. The ability to differentiate on product very much is in the past now. And as I say, the key battleground is in customer experience. So a lot of the work that we've done within Royal London in applying AI has been in underwriting, and it's been around how do we streamline the underwriting process to make that process slicker for customers. Because as you'll be aware, in life insurance in particular, the underwriting journey can be quite arduous for the customer. So, there's medical evidence, there's digging into people's medical histories. So these are things that are not necessarily very comfortable for the customer to go through. So we definitely see that there's scope for us to use AI and machine learning to improve that experience for the customer and get them on risk more quickly, right? So that's just one example, but I think that logic applies across the board. So we've only really started to see the tip of the iceberg in terms of the use cases that are in insurance, and we, along with many of our competitors, are now kind of embarked on that journey to embed AI, data science and machine learning into our organizations. So I'd agree that with the people who said that all of the above are probably barriers to adoption of these things. I suspect that maybe why ethics has come so low down is that ethics isn't necessarily a barrier to getting going, right? So ethics often comes in once you've had a couple of initial successes and you're starting to think, how do we scale this up? How do we take things from here? So ethics tends to come in a bit later, I think, in the kind of journey that firms tend to go through. But certainly expertise has for a long time been one of the barriers. We've all known about the shortage of kind of data science skills out in the market. That is changing now, particularly at a more junior level. So, for example, I'm based up near Edinburgh in Scotland. The Scottish government has invested quite a lot in data science and promoting data science within the central belt of Scotland, and now there are quite a few really high quality master's programs in data science that are really churning out graduates. So actually it's quite easy to hire really good quality people at that more junior level. The expertise where there's still maybe a bit more of a crunch is at a more senior level. So I'd see that expertise aspect is starting to improve itself now. So for me, the main kind of barriers, and certainly the ones that we've experienced within Royal London, are around buy-in. So how do you get buy-in from your senior leaders? How do you get buy-in from the people around the business who are ultimately going to own the propositions and the services that you're going to manufacture using AI? So that for me has been the tougher challenge that we've had. Does that answer your question?
It does. It's really interesting, actually. And I'd also be interested, because my background's far more in non-life than life, and my prejudice, I guess, in the UK market in particular, is that there's more uptake in GI than life. And Leslie, as a part of a composite, I mean, it'd be interesting to get both of your views briefly in terms of why you think that. Firstly, is that true? And secondly, do you think there are just as many opportunities in life as in GI for this to have an impact?
So I certainly think that it's true, right? And the main reason for that, I think, is that techniques, more traditional statistical techniques like GLMs, have been used within general insurance for probably longer than they've been used in life. And so that's part of the reason why you've got a higher uptake in GI. And I think also the use cases probably lend themselves more obviously and naturally to the use of AI. So for example, underwriting in general insurance, the typical organization is going to have tens of thousands of claims on their books. So that's quite a nice big data set. Typically, an average sized life insurer in the UK is going to have, only a few thousand, so it's an order of magnitude or two lower in terms of the volume of data they've got. So GI also tends to be a bit more transactional, so that lends itself to kind of implementing AI much more readily. So again, if you think about like claims, for example, because the value of claims within general insurance tend to be smaller, the risk and the cost of getting things wrong if you implement AI are obviously proportionately smaller as well. Whereas in life insurance, it's much more difficult to implement AI in claims, because the cost of getting things wrong, is much bigger, because obviously your claims are, £500,000 up to £1 million and more pounds. And things could go disastrously wrong. And as Leslie were talking about before, you need to get your reinsurers bought in to doing this. It's a lot easier to do that on the GI side. But to answer the last part of your question, I definitely think that there are more opportunities in life than there are in life than in GI, mainly because it's a more complex product. It's a more complex business, and the engagement and the relationship with the customer is longer. It's longer term, right? So yeah. It's likely that you're going to have more touch points to engage with the customer and apply AI.
Thank you. Yeah. That's very interesting. Sorry, Leslie, would you like to say a few words? I think I'm thinking of bringing Sean in quite quickly to cover particularly some of the customer points that have been raised. But if you could give a quick response on the, yeah. Thank you.
Fully agree with what was said. I just wanted to add the point that generally speaking, there may also be regulatory, well, it's really hard to sell life, if you like, in a very simplified, direct manner, right? I don't want to make it into a direct versus non-direct channel debate, but And then what also complicates things is that at some point in the process for life, for market conduct reasons or concern over regulation, there are certain things that have to happen regarding financial advice, and that creates inadvertently creates a barrier. But as was said, I do think life, because you have a 30-year lifespan, a 30-year relationship with the customer, to kind of, if you like, mine or provide services over that 30 years, it's really lucrative if you can get it right.
Interesting. Yeah, and I guess there's a key difference in the relationship you have with a life insurer. If you're seeing a pot of money grow for a positive purpose, whereas on GI you're going to them when you don't really, when something's happened that you'd rather haven't happened, I guess. So there can be that dynamic in there too. Before I go over to look at the regulatory angle from John, Sean, there's lots of interesting points that have come up here, and I think one of the ones that really hit me was this idea that I guess AI can help improve customer experiences, but also insurers perhaps are becoming slicker and more focused on that part of things. I guess, are you seeing that? And also on the flip side, what are the things that are kind of concerning you in terms of the customer side? I guess without stepping too much on panel 3, just some thoughts would be really good.
So thanks ever so much for having me, and it's fascinating to hear what my insurer colleagues are saying. So much to pick up there. We could have another conference, I think. I'm going to slightly ignore you, Nick, if you don't mind, but to a good end.
Not at all.
To a good end, I hope. So I'm an insurance fan. I'm an innovation and a technology fan, but it's really interesting, isn't it? How the language is all about barriers to implementation. So the lens that we're all looking at here is capability for insurance, right? Well, there are other people in this relationship, and they're called customer, right? We all know that, but it really helps us, I think, to shift the language a little bit to say, instead of asking what are the barriers to implementation from a customer point of view, I would like to ask the question, what would it take for customers to feel like they were partnering with insurers to an AI that works for them as well as for the business models? Everyone understands that businesses need to make money. That isn't the issue. So if we look at it that way instead, here are 4 things that I think we should let's do and let's not do. And I'm going to start off with 2 let's not. So let's not automate mindsets, processes and data that already don't work for too many people who need access to insurance products. And so if underwriting philosophy doesn't change if you automate it. If your underwriting philosophy says, if somebody that you're insuring says, I now need to tap into that safety net to get support for a mental health issue that I'm having, and then your underwriting philosophy says, regardless of whether that person went through a course of treatment and became better, that record, that loading, whatever language we use, our own lovely little secret language, carries that around. That person carries that loading around with them for the rest of time, not just in that organization, but wherever else they go. So an AI in that sense is automating what is actually, to my mind, an unfair process, but at least explain what that process is to your customer, right? Second, let's not keep on asserting as a matter of fact that fintech, AI, whatever we call it, automatically means better outcomes, automatically creates better competition that actually helps consumer, and automatically gives access to more people. There's no data that backs that up at all. And colleagues and friends that I talk to in insurance, including data science, because I love data scientists, are saying, yeah, you're right, it's a working hypothesis actually, and we need more data. Okay, so those are the 2 let's nots. Let's then recognize also that a barrier to implementation, I'll use your language, a barrier to implementation from a consumer point of view is trust, right? And it sits at the key to this. And insurance agonizes about trust and has done ever since I started obsessing about it, you, us in 2008. So, and it's not just financial services, it's really important, I think. We are now part of an ecosystem that is digital. The digital infrastructure for our digital lives sits with big tech. Trust in big tech is eroding rapidly. And what civic society organizations have been worried about for a long time, about the nefarious impacts, or at least the negative impacts of platform economy, we've had 2 examples this week. Amazon are saying no to Visa in the UK, and Facebook have decided that after 11 years of making profits from facial recognition data that wasn't properly consented to in the first place, they're going to withdraw it. Now, regardless of what we think about that, for organizations that worry about the power and the access and where is financial services sitting, how can we rely on it if it's reliant on big tech platforms that are the trust, the halo effect in big tech, I think, has probably gone forever. And then the final let's not, Nick, the final let's really respect rational concerns and challenges from consumers about participating in uptake, engaging with whatever the language is that you want to use, or buying product that involves AI. In my innovation world, so often the unthinking language is about them and us, people who get it and people who don't. And there's some kind of underlying idea that if you could only educate people better, they would see the light and come with you on the tech journey. And that's really dangerous, because there are rational objections here. And if we want a partnership, a trust for the financial system and trust with customers, and for them to be working with us to develop stuff and buy more stuff, then we should be recognizing those rational challenges and not trying to pretend that somehow it's a Luddite or an ill-informed, or, that is not to say, though, that financial education really does need to be focused on a lot more as well. I hope that's helpful.
It is really helpful. I was going to say, just as you've just said, we could have time for an entire separate panel to cover possibly even each of the points you've raised there. So I'm not going to, John's got the short straw of going last and kind of trying to cover all these points. I'm not going to suggest, John, that you try and address each of the points that have raised, but instead maybe just kind of pick out a few and from a supervisory perspective, perhaps just kind of give some sense of what you think it is that regulators need to look at when we're dealing with these technologies. And then, Sean, I think we can come back to some of those points in panel 3.
Yeah, thanks, Nick, and thanks for having me. And this has been a fascinating panel already. I've really liked a lot of the points that have been made by the fellow panelists. I think Sean hit some nails on the head, exactly what we were thinking in terms of, it's important for the regulators in this industry to continually move towards that what's best for the consumer, and letting that guide us and letting that, kind of shape the discussion. Leslie's mentioning that these are just tools, I think, is a critical point that's going to probably play out throughout the discussion today, and something that I know is it's evolved over time. That this is simply another tool that we have within the industry. But getting back to that level of trust, it's overcoming those challenges of the consumers. We're seeing that in the United States. Not all of the U.S. consumers have embraced the use of telematics. And there's a reason for that. And I think it's a lot of what Sean mentioned. But going back to the poll, I'll tell you, as a regulator, I'm excited to see that only 9% think that regulation's a barrier. But I'm also not silly enough to think that it's not probably due to a lack of expertise, or it doesn't contain all of the above. The reality is there's a lot of things that we don't know yet. I think you could probably argue that in the regulator community that maybe we don't even know what we don't know yet. And I'll pat myself on the back a little bit as a regulator who has been very, very engaged in technology and the growth of these new spaces. There's a lot of different issues that happen in the insurance industry and the financial services industry. Not every regulator is probably going to be as tuned into technology advancement as some are. And so that brings back the expertise piece that I think is really a challenge that we're facing on the regulator side. And it comes down to the skills that we have and the skills that we need. And we're seeing that new need for new skill sets. Some of the things we're doing in the United States to address that is through the NAIC, is developing extensive training for our actuaries and other staff to do some predictive modeling review. The coordination and expertise is needed also beyond that rate review process for other lines of insurance. So I know our insurance companies are bringing new talent. Supervisors also have a role in developing that human and technical resources. It was mentioned before, there's been a lot of emphasis put on data scientists, and I think we are starting to see some of that build, but it also takes a long time for that expertise to make its way probably up the chain into the regulatory space. And as I don't know how you all are, but for a government entity in the United States to hire a data scientist or something like that, that's a challenge. Those are high dollar positions, those are high salary positions, and given the budgets across our country, and frankly, and probably in other governmental entities, that does make a challenge. So we've been relying a lot on the coordination between states and across our jurisdictions, and the NAIC's Big Data and AI Working Group. We're working on artificial intelligence and machine learning, and looking at the governance tools and what does that mean, and how to get some best practices around what governance looks like. Because again, it's really hard to craft regulations about things that you're not probably fully sure on yet. And so that's, I think, why we've taken, at least from the U.S. perspective, of more of a principled approach. And how do we address these, and what are some of the things that we've got to look for? And trust is certainly one of those big pieces. And having good governance and good oversight leads to more trust with the process and the tools. Just want to touch on one other thing that we're also doing in the United States, and again, we understand that supervisors across the world have a really hard task in front of us. It's trying to thread that needle between making sure that the AI systems are fair, they're ethical, they're transparent, while not stifling that use of these tools, because there is a lot of benefits that come from these tools. And I think the goal that I've always brought forward is I'd like to look back in 10 to 12 years and say we got it right. That's going to be a challenge. Again, the market that we are in now is going to be very, very different 6, 8, 10, 12 years from now. I think we're in the middle of a revolution. And so how do we continue that movement forward, but again, putting up the proper guide rails? And so, we've have a number of different task forces that are going on nationally. We've continued to work, and we're forming a new letter committee for the NAIC, which I'm sure some of you are familiar with the NAIC, but the creation of a new kind of parent committee in the NAIC is a monumental landmark movement forward. And so we'll be creating the new H committee, which will focus on these issues that's been traditionally in a task force level, which I've been fortunate to chair. But we're kind of growing that task force up and continue to work on this. But again, we always continue to value the IAIS and the partnerships we have on this topic, and even the US-EU Big Data Working Group and the Dialogue of Insurance Project, which I've got my colleagues Commissioner Brain and Oman are certainly involved in this. But the reality is that it's a global understanding of this of our supervisory approaches it's going to be critically important to how we move forward, because technology doesn't know borders, and what we do in each of our respective jurisdictions is going to have an impact on our respective jurisdictions. And so continue to work together is of critical importance, because like I said, there's a significant amount of value in these tools, and we just got to make sure we get it right.
That's really, really useful, John. I also completely agree with your point about the pace of change in the market. I think in the UK, firms have talked about digitalising and improving the technology for years, but it's often been a bit like a kind of set of buzzwords, and we increasingly see things that actually have genuine projects attached to them, and there is change happening. So we're having to respond to that. As you say, it's very challenging. And usefully, that brings us on to the next session. I believe Laurent is chairing the next session, which will be around the regulatory challenges, which you've already started talking about. So thank you for that. And over to you, Laurent.
Thank you, Nick. Really exciting discussion, and I was as well quite surprised putting on my supervisor's hat by the 9% in need of regulatory guidance. So that needs to be looked at further, indeed. So let's move to section 2, which is about how AI ML should be regulated after all. Why is it an important topic for us today? I would say first because supervisory guidance has indeed been identified as an IAIS strategic objective on digital transformation, which is in line with its mission of maintaining and promoting a fair and stable insurance markets to the benefit of consumers. But a key challenge is that there are a variety of regulatory frameworks in place across jurisdictions, and a diversity of approaches taken. So in some cases, additional regulation might be needed, while in other situations, the regulatory burden might be deemed already too heavy, or maybe in other cases yet, a lack of regulatory clarity, as we just suggested, might induce a barrier to innovation. Hence the question of whether further guidance is necessary, and if so, what form it should take. One more reason, I believe, for the importance of this topic is that there are major supervisory challenges related to how AI-based systems can actually be evaluated and monitored over time, not just in terms of methodology, but also quite operationally speaking in terms of technical skills as well. So you will have the opportunity to answer another poll question, which is going to be precisely about what, according to you, which of the following regulatory approaches would lead to the best outcomes. So you have the choice between no additional regulation, signposting to existing provisions in the current regulation, more detailed rules, so much more prescriptive approach, I would say, principle-based regulation, or cross-sectoral rules. While we wait for the audience votes on this to be collected and tallied, maybe we can start things off with you again, John. If you would mind providing us with an opening view. As you said, you worked a lot on these issues, including with the NAIC publishing its principles on AI, among other things, I believe last year. So you're, in this case, able to extract a common denominator of best practices which US supervisors should be looking for firms to adopt. But I wanted to ask you if it was a self-evident derivation process, or if you had to work around diverging expectations and strategies from state supervisors. And as a follow-up question, if in your view, this kind of approach based on common principles can be further extrapolated outside and beyond the US.
Sure. Well, thanks, Laurent. And this is certainly an area that I'm excited to see the poll results on and see where others think this should go. But to answer your question, I don't think, certainly creating the AI principles that the NAIC published last year, it certainly wasn't an easy process. Again, we're kind of entering into a gray area of regulation, and oftentimes when you talk to my colleagues across the country and probably across the world, we are very much prefer that bright line regulation. Give me a law that I can enforce. Give me a clear understanding of what this means, and I can go and enforce that. And the reality is, we're gonna, as a financial services industry, we're gonna have to get a lot more comfortable being uncomfortable, because again, this is going to continue to evolve. And so it certainly wasn't an easy process, and there's a number of different divergent views on how we should go about doing this. To be honest, we took the lead from some of our international colleagues and some of the work that has been done in ethical use of AI, and we're able to kind of come down to, I would call our AI facts. They're fair and ethical, they're accountable, they're transparent, they're compliant, and they're safe and secure and robust. And so it's really, it's really a high level understanding of what this means. And that was really important for us to get out to the industry, because I would argue there's a number of depending on where you're at in the industry, you may be far down this road and understand the impacts that AI has, but there's also a number in the industry that really don't understand the full capability of these tools yet. And so giving them this principal document, again, should have some of those discussions in the boardroom, because the boardrooms need to understand what these tools do as well. And they need to have an understanding, clarity to what tools are being deployed within their company, and to really be able to weigh in on that. And I think the principles document allows those discussions to happen and to happen. Some of the other areas I think it's important for our firms to focus on is, obviously maintaining that strong consumer focus. We've touched on that already. Understanding how the use of the new technology fits within the current regulatory framework. The financial services industry is a heavily regulated industry. And again, it goes back to the point that Leslie made, that these are tools. And we do have a regulatory structure already in place, and it's adapting these new tools into the existing regulatory framework. And then it's going to come down to the implementation of a strong model governance. And that's going to take some significant expertise, which we talked on the last section, from all parties involved. If you want to have strong governance, you got to have a strong understanding of what the tools are. And then lastly, it's we're hopeful and optimistic to see some of the movements in the transparency to not only to regulators, but also to consumers, because our consumers have to understand what tools are being utilized, again, to develop that trust. And so, again, regarding that consumer focus, insurance supervisors, we're certainly going to be much more receptive to the implementation of this new technology if a firm can come in and actually explain what the consumer benefits are. And you'll be surprised that at times we've got, we're kind of, again, learning. We're learning as we go oftentimes, and developing these tools and getting an understanding of these tools. And if a firm can't clearly articulate what the benefit to the consumer is, it's going to be very hard for us as regulators to have that conversation with the consumer as well, because we'll ultimately get those calls. We'll ultimately get those complaints that come to our office and say, hey, this is unfair, and explain why this is being done. So being able to articulate those consumer benefits, also need to understand the business process and that provides the compliance with the department and our ability to engage in that independent assessment of how these technologies are being used and how they fit within that current regulatory framework. So firms are facing business pressures to implement and change and to always be competitive, but they always need to remember that, again, we're working in a very highly regulated industry. And the due diligence regarding the use of this new technology and how that complies with the regulatory standards absolutely can protect the firm from future regulatory scrutiny or regulatory risk. And so we've got the principles out on the NAIC. We've kind of the approach we've taken, but again, compliance with the existing regulatory structure is always a safeguard to moving forward. And so being able to demonstrate that the compliance you're complying with the existing structure is another strong, I would say, fundamental tool moving forward. And it's important for firms to proactively verify that their AI systems are working as they're intended. Whether that's through the algorithmic auditing or model governance. We're looking at in the United States here, whether there's a use of third-party companies to audit these algorithms to produce a score on what would be fair and ethical. The unfortunate thing at this point is we don't know. I think we can audit those algorithms. We can get a score. We don't know what that score means yet. So you can get a 7, and is that a 7 out of 1,000? Is that 7 out of 100? Is it 7 out of 10? And so we still got some ways to go in terms of fleshing out this auditing and what that looks like and what's included in that audit and how that process is conducted. But we have made some significant strides. The industry has made significant strides in being able to verify and audit these algorithms, which is going to be a critical component moving forward. And then also, lastly, always encourage firms to engage with their regulators wherever they are, early and often. I can speak for my colleagues across the United States that I don't think there's any colleague that is opposed to technological advancement or opposed to new tools. But getting us in on the early steps can, one, save a lot of headaches going forward. But we also have a duty to make sure that the rates that are being charged and the products that are out there are not inadequate, they're not excessive or unfairly discriminatory. And so we need to have, as regulators, need to have a strong understanding of what data is being used and the impact of these complex algorithms on our consumers. And the firms need to assess their transparency with their consumers and how that provide that proper balance between protecting the confidentiality and proprietary systems, which we're certainly seeing more of, and providing consumers with that necessary information to understand how their data and technology is being used and how it's impacting them in the life cycle of their products and frankly, their life. And all these things are critically important, but I liken it to go back to, and this is a very oversimplification, so I understand that. But when you look at the AI principles, it's essentially, if you look at that, it's do no harm. So don't leave the consumer worse off than before the implementation of this tool, and use these tools for good. And so again, I know that's oversimplification, but as long as our firms are operating in that manner, I think they'll be a step ahead of the game as we continue to develop guidance. And whether that eventually evolves into model laws, I don't know. But following some principles, following some high level just instructions, and being able to communicate these tools effectively is going to go a long way.
Thanks a lot, John, for this detailed answer. We now have the results of the poll ready to share, and they will be shown to you by our technical team shortly. Here they are. So no additional regulation needed, 0. Then the majority are actually in favor of additional principle-based regulation, followed by cross-sector regulation, to my surprise, I should say. And then a detailed regulation and signposting a little bit behind. So I think that's interesting. And of course, depending on where the audience members are located, an answer like signposting to existing regulation would have very different implications. But the fact that people in particular consider that additional principles are the way to go is intriguing. And I want to ask Sean about her reaction, since you've been working a lot with InsurTechs, and as we already heard, you're considering the impact on consumer protection from those systems. What's your take on these results?
So I'm really heartened that no one thinks that no more regulation's needed. I'm also heartened that its principles comes first up on the list. And I really loved the way John articulated, you know, the regulatory challenge issue. I mean, I can't find the right words to really to express to you all that I really, without having been a regulator, I empathize with the scale of the challenge and task that you have and that you so eloquently outlined, John. And I love your phrase, give me a law. And also the fact that you know that you can't wait for one, because, you know, that's going to be a while coming, I think. So I think the way that I thought about it was the principle of governance now needing to be ahead of the experience curve. So we get the internet in 1989, we get cookies in 94, 95, we get GDPR in 2018, and we're still arguing about it. Not good enough. Not now, not with the pace and acceleration and the sheer impact that it has on real people's lives. So to my mind, and that's not criticizing anybody here, of course not, but it is saying that's the framework that we find ourselves in. So just a couple of thoughts, I guess, responding to that, give me a law. I think, look, whilst we don't have the law, but we have codes emerging. We've got the UNESCO human-centered AI just this week being agreed. We have obviously the EU regulation beginning to at least make the difference between high risk, low risk, maybe limited risk. You know, it's been described as a Wild West up to now, not just by commentators on that framework, but also the UK's Centre for Data Innovation and Ethics in 2020 produced an analysis that was based on talking to lots of people active in insurers, and there is actually a huge amount of use of AI and ML, particularly in general insurance, and it scares the life out of me, I'm afraid, Gwilym, that life is going to go rushing headlong where GI has gone without learning the lessons. But listening to you, I think I'm less concerned, if that's okay for me to say that. So instead of the law, then go to the inside experts who are wanting you and involving us as civic society in debates about how ethics are being managed, particularly in big tech or not. Understanding the harms, okay, talk to the lived experience experts, the experts by experience who are on the receiving end of those harms right now. In the New York Times, John, you probably saw a report, I think it was this week, it might have been last week, about the really devastating impacts of really badly done tenant screening, because it's a massive business with massive amounts of data, velocity required, accuracy missing, especially if you happen to have a Hispanic surname. I mean, it's really scary. So I think regulating, in order to get ahead of the experience curve, which I think is one of the governance principles that really needs to be at the heart of all this, how can regulators be helped? Well, I think it's talking to people that you don't normally talk to, embedded within the process, not as consultation, not as allowing people to kind of respond to consultation, and particularly those third sector and civic society organisations who just don't have the time necessarily to contribute in the way they want to once the regulatory juggernaut has started rolling. But I also just had a couple of points, really. There's a load more, but Nick, and Laurent, you'll be relieved to know that I'm going to restrain myself. I think, you know, my experience is this. So when I look at established firms who are quite often lambasted for being behind the curve, and you know what I think about that, I actually think I am concerned about embedded exclusion that could be designed out using AI and ML not happening as fast as it should be in those businesses, because they are living in the real world of massive customer bases and all the other things that they have. But what doesn't concern me so much is the cultural mindset, the inhibitors, if you like, on those businesses that they will try to do the right thing. On the other hand, when I look at greenfield businesses, I worry a lot about that cultural mindset because, quite frankly, it's missing. I have actually listened to firms explaining how they're only interested in the customers who are interested in them, forgetting that in the UK, at least, you have a regulatory responsibility to care about vulnerable customer. actually. That's part of having the privilege of being regulated in the UK. So the impact there, I think, the lack of that, we need to do the right thing, as you put it, John. The thing that worries me there is that those greenfield businesses don't get the regulatory attention because they're not big enough yet. And I think from a mindset and attitudinal and system perspective, in many ways, that's where the real issue is from a governance principle point of view.
Thank you very much, John. I'd like to go back briefly to one of the answers to the poll question, namely that a quarter of the audience is in favor of cross-sectoral additional regulation. And that, I think, is an interesting point from a supervisor's perspective, namely because of what it implies to articulate sectoral regulation with a transverse one, especially when it comes to data protection. And I'm speaking on the basis of numerous interactions with both insurtechs and incumbent insurers. For example, some of them consider that those respective requirements are mutually contradictory, or at least in tension. For example, the limited data retention period mandated by GDPR versus the need to store a complete history of both the logs and the input data to be able to replay and explain an automated decision. And a similar example could be given, but in the case of fairness detection, but I'll keep this for the third session, which will be on that. So, for example, I wanted to ask William what your take on this is, and I'll admit I haven't quite studied the state of data protection law in post-Brexit UK, so I'm happy also to get a refresher on this as well.
So still, things in the UK still stand as they were, before we exited the EU, right? So so we still have the same obligations, both from a regulatory and a moral point of view. So I've spent the last year or so as a member of public-private forum that the Financial Conduct Authority and the Bank of England have put together in the UK to look at exactly what we're talking about here, which is how should, what are the risks around the use of AI within financial services, and to start giving those guys a steer on how they should regulate this stuff in the future. Because truth be told, I don't think anybody really has the answer to how we should regulate this stuff, right? I think it's still an open question. I think people can come up, as in the poll, people can have opinions about, well, it's probably a little bit of principle, it's probably a little bit of signposting. My view is it's probably going to be a multifaceted thing, right? You're going to have some principles, but also you're going to have some some detailed regulation, a bit of cross-sectoral. What really heartens me, and this comes to the points that Shyam was making, is that the membership for that public-private forum has been about 25 experts from a range of different financial services institutions and technology providers, fintechs, and so on that are active in the UK. And you can go onto the Bank of England's fintech website and download the minutes if you want to have a look. But the issues and the the risks that we've come up with as members have been really quite comprehensive. And actually, I found that quite heartening, because actually it's showing that all the practitioners all across the industry, no matter where you're sitting, we all understand what the issues are, we all understand what the risks are. Everyone, I think, has got their eyes wide open. So I don't think anybody is under the illusion that we're going ahead. But it does worry me a little bit that Shyam was talking about some of the kind of maybe the new starts, the greenfield providers that are maybe not quite as on board with some of the risks and some of the obligations that we have. So I think the jury's still out on exactly how we should regulate this stuff, but we are making progress in that direction.
Thanks a lot, William. I wanted also to remind the audience that they should feel free to ask any open question to our panelists, and we'll try to keep some time in the end of this panel to ask them. Before moving on to the third and final section on fairness and bias issues, I wanted to maybe take a few steps back and ask you about the general approach by supervisors to involve all stakeholders in the financial ecosystems, because it seems to me that a few kinds of strategies have emerged in the past years among regulatory authorities, either regulating before technological innovation can happen at a significant scale in the market, or alternatively, facilitating innovation through experimentation, then producing guidelines, and only if and when necessary, introducing new regulation. And maybe we can also see as a third way, or maybe a variation over the second one, something that would consist of a co-construction of guidelines, up to including, in some cases, implementing an open source framework in collaboration with the industry. And here, of course, I'm referring to what the MAS in Singapore famously did with their FIT principles, followed by the Veritas initiative. So there are these different approaches possible. So maybe Leslie, you can tell us a bit more about the Singapore initiative, and we'll then ask other panelists if they want to give their own view.
Sure. I mean, maybe I should start by setting context, right? And also partly answer this, maybe why cross-sectional. I guess cross-sectional can be read as cross-sectional within the financial industry, but cross-sectional across many industries. But the context I wanted to set is that AI and data science is, was considered to be a very important national priority. And because of that, to Shan's point, it was recognized very early on that you needed a good governance framework, right? Because you want trust. If you don't have trust, all your wonderful dreams about, using data for good or using AI for good, it's not going to work. So very early on, a cross-sectional, if you like, overall arching framework was put together by the relevant, I wouldn't call this necessarily regulators. One of them does oversee data, but one has oversight over the, if you like, the technology sector. And after that, MAS built on it by having these FIT principles, which FIT just represents fairness, ethics, accountability, and transparency. In 2018, principles based. And maybe here the concept that I find in industry helpful is the following. I mean, first of all, okay, maybe this may not apply to every fintech, to Shan's point, but I think if you were a company thinking of sustainability, you do want to retain the trust, right? You're worried about, as a financial institution, capital, but you're also worried about your customer, right, and how they think about you. So for me, regulation isn't necessarily telling us something we don't already know that we need to do correctly. And in a way, MAS reinforces that with the principles, right? But they didn't just stop at the principles because, what is fairness? What does ethics mean? It's now been three phases of Veritas, which started phase one, looking at fairness, especially banks, and phase two, led by Swiss Re and a few consultants and a few insurance companies, looking at how fairness ethics applies in the industry, and then soon accountability and transparency. I guess out of that interaction, talking about how to implement it, could come the co-creation, and maybe we could call them signposting or a bit more detailed regulation, but certainly, at least as a practitioner, to me, it articulates more clearly what the principles mean and can be helpful. Don't read them as a checklist or something more onerous, but it's helpful. I mean, in any case, it's certainly something you could read up on. It's on the MAS website. But I think this idea of co-creation is very important. It is, however, not just something that MAS does with one part. It's something that's more industry-wide, and it's driven a lot by a national recognition that this is how we want to balance safety and the creation of the new, innovation.
Thanks a lot, Leslie, for these explanations. And now I will give back the floor to Nick to talk about the potential for financial exclusion associated to AI and ML. Back to you, Nick.
Great. Yes, thanks very much, Laurent. I have a kind of general intro prepared, but I have to say it's kind of been exploded by the conversation we've already had. So I'll stick to it a bit, and I'll try and weave in some of the points that have come up to that, and see if we can keep some discipline. I think personally, this is the most challenging, controversial, difficult question to consider is kind of ethics and fairness. What do we mean by it? As Leslie said, what does fairness really mean? you can't just measure it. These are also kind of these are real moral questions that everyone's grappling with every day. And you know, if you could measure it, we would have a simple answer. But just to give a couple of the sorts of examples we tend to hear about. So one thing, and again, Sean referred to this earlier, it's not a given that financial inclusion or customer outcomes will be improved by AI. If used in a certain way as a tool, it could, but also you have the risks of the idea of this sort of segmentation of one, where you have incredibly accurate data. I mean, again, Sean used the example of medical data, mental health data. Firms sometimes choose not to use this information, but you know, where firms either choose not to and end up using it in error through a proxy or through an algorithm, it can still work its way into the results. That's something very challenging for firms to look at, is to try and kind of exclude those elements. Another issue which is very frequently raised is this idea of you need a lot of input data to these models. A lot of it will be historic. Attitudes change, prejudices and biases that maybe were more extreme or pronounced in the past maybe don't exist now, and some of these can creep into models through the back door if adjustments aren't made to those data sets, or people don't understand where to look for those biases, and that's another really challenging area. And I think also maybe on a slightly more kind of technical point, you have got the issues around raised by GDPR, the need to explain to customers what you're really doing with their information. Why is it in their interest to be sharing this information with you? Because they're basically paying for a service with data, so there's a relationship of trust that develops there, which is very, very, very challenging to look at too. I was going to see if I've got any more bits from Sean that I wanted to mention that she raised earlier. I think it was kind of linking Sean's point about customer trust and that things are for their benefit with Gwilym's point about how in the future, perhaps, or even now, that competition in the market could perhaps shift more towards customer treatment, the customer experience, and maybe those 2 points will interact. So I think that's something interesting we can touch upon. Again, we have a poll, so I'm going to ask that we launch that, please. And as with panel one, I'm going to first of all go through, maybe get Sean to give her opening views, and then we'll come back when the poll's ready and talk about that. Again, Sean, you've said so many interesting things already, and I probably struggle to encapsulate them. So I think the issue with this is there's so many points which are quite technical around kind of, I don't know, the data and kind of the algorithms, but there's also the kind of moral questions. And I just wanted to give you a chance to kind of maybe expand on some of the points that you mentioned in your earlier bits before we get the response from the rest of the panel.
Yeah, thanks so much. So first of all, I think it's really important for people to realise, as I did when I started to become an AI nerd about 5 years ago, deliberately spending time listening and talking and researching it. You know, there is a massive debate that says AI actually doesn't work. So Andrew Ngig, who is a globally renowned father of machine learning, actually said a couple of months ago, not just healthcare AI, but the whole of AI is at a proof point. It's a proposition that hasn't been proven yet. Now, how many of you, I mean, there are some real experts here, I take that on board, but facial recognition, fundamentally flawed for people of color, we know that now. AI experts saying this business of thinking that you can identify and classify emotions through faces is for the birds. These are the people that are actually the experts in designing the algorithms. We need to take that on board, first of all. So those ethical dimensions that you're talking about, for me, I kind of interpret it in a slightly different way, because I think using the word ethics means it's kind of nice to have. And I think it's an operational resilience point. I think it's on a level with solvency, quite frankly. So I think we should be redefining. Regulators need to redefine ethics into language that talks about operational resilience. That is not to say that we can ignore the moral dimension, which I would relabel social license. The license to innovate, the license to be who you are right now as a financial institution, which we know Mark Carney and lots of other people are talking about. Then there's if we look at ethics through the lens of operational resilience and corporate digital responsibility, which by the way is not codified, there is no codification of that. I think at the very least firms should be doing that themselves, but I think regulators, that's something that you can do, I believe. It's the data again. This whole machine is fed by a value chain of data. There are massive issues here with the accuracy, with the provenance, with fundamentally bad business models. Lead generation it stinks. There's some real issues to be dealt with here. And so I think, that though there are fundamentally tangible, practical, operationalizational issues that we need to look at. If you're going to use AI, you need to be defining what you consider to be ethical and responsible AI, and how what you're doing supports customer. I personally think saying that explainability is just too hard isn't good enough. I don't think that's good enough. If we're going to use it and people's lives are going to be impacted by it, then we should be able to explain it. But I also know, Laurel, that is a world of pain from an executional point of view. And I think then just finally, I think there's an ethical dimension here for people sat at board being asked to make decisions. Somebody else mentioned this earlier on. I'm sorry, I've forgotten exactly who it was, but I think that's a really real issue. The human beings sat around the board tables who are, yes, they're stepping forward to take the responsibility, but they're also being asked to take the responsibility to make very important decisions. And how do we support them? So I have 4 questions. Nick, if we've got time, I've got 4 things that I think every board member should be supported to be able to answer by their firm. And I think the regulator could use this maybe as well. So where is the live inventory of internal algo models used for any purpose in the firm? Where is it? When was the last time an algo, a model, was decommissioned? Where is the accessible, in other words, built to be understood by non-techies, description of the life cycle of one piece of customer data from where it came from to where it's going, that anyone on that board, regardless of their functional expertise, could look at, understand, and explain to somebody else? And then lastly, how long ago, if ever, were your data partnerships, your suppliers, asked to go through a similar, actually, 3-stage audit? So I hope that kind of addresses what you wanted me to address, Nick, without going over too much old ground.
No, that is really, really useful. I'm going to try and break it down into little manageable chunks so that I can ask questions for Leslie and Gwilym first, I think. So I think maybe I'm going to try and, I might misinterpret this, Sean, so don't be offended if I do incorrectly, if I get it wrong. But as a sort of top-down bit, you're talking about the board's responsibility, and I think that's particularly around the kind of the moral dimension and corporate digital responsibility. So I'd like to kind of ask, that's part 1 I'd like to ask. The second bit I'm very interested in is this constant issue of accuracy and provenance of data. I think that's a kind of, I guess that's an operational thing. So I guess we've split the question to start with into the top-down kind of moral responsibility point as a broad question, and then a second specific question on how you deal with accuracy and provenance of data. And I have noted down your other 4, but I'm not going to do them now because I think my head will blow up. But I think we can maybe weave those back in later on. So I guess either Leslie or Gwilym, please, one of you go first. We have got the poll results, but I don't want to break up the momentum on this question. So we'll maybe come to that a little bit later in the panel. Leslie, I'll pick on you, sorry.
Oh, okay,
yes,
all right.
Thank you.
So I'll go ahead. Maybe I'll make a few points. I guess I have much to agree with Sean, but also maybe I'll be controversial by saying I actually think that I think AI models, when they go wrong because they're doing exactly what you told them to do. You just didn't realize that was what you're asking them to do. And I think this goes back to, I say it that way to make the point that technically, in my view, good science means that we know, good engineering practices and good science means we know how to deal with some of these shortcomings. The problem is not necessarily the technical part, it's the communication part, it's the use case part, right? You have a tool. The tool has specs around it. It has constraints. It can go wrong, but you don't always communicate that, and people misunderstand what the tool is meant for. They misuse it, and it gets you in trouble. to my point, maybe I would say the following. So for example, with my data scientists, I require them to write a document at the end of every model, right? We have to have model governance. We need to have a date. We need to know where the data comes from. These are all things that we as financial institutions can do. It's normal for us to do. We do not have to, because it's AI, not have these proper governance and risk management practices. But anyway, just to be clear, right, in the chain of, if you like, a machine learning or AI problem, we have the use case, we have the data, we have the algo, and then we have the production and the learning. And in every one of these cases, it's possible to be technically correct. The hardest, perhaps, is the use case, but in data collection, I know we like to say things can be very complicated, but I think it's also easy to know if I have unbiased data or biased data. It's also easy to know if I have pre-processed the data and created problems with that data. I think what's harder, because we should ask this question, is that when I use personal data, am I using it for the good of the customer? I actually think it's just not an issue of bias, but I think we do have a responsibility to say, if I'm using personal data or sensitive data, what is the value I'm bringing to the customer? Now, that's not so easy a question. It won't be just technical. The algo, again, I build a model. I can look at the results. I can ask from the results, can I figure out if he's of a particular ethnicity or of a gender, or am I discriminating one way or the other? Maybe the point, I guess, again, to just be controversial and sort of disagree but agree with Sean, do not forget, without the AI and ML model, I am still making decisions with really bad data and with human heuristics. So, again, in good engineering, good science, I will be always saying, what is my baseline? What is my model? What is my improved model? What is my next iteration? But the real trick, again, going back to use cases, what am I targeting? Am I targeting an ethically valid use case? Am I actually bringing value to the customer? And maybe that's my last point about the learning, right? The learning is really important. We just don't let models right. And in fact, I would say, I would feel very uncomfortable with any model where there's no human at this point in time, at least what I've seen. Any model that's completely 100% automated, right, without sufficient checks. Although I will point out in industries outside of ours, in some use cases, AML CFT being one of them, we do have these models, and there are no humans necessarily involved until you get to a very final and maybe serious outcome.
Thanks very much for that, Leslie. I think maybe it's worth looking at the poll now before we go over to Gwilym for some additional comments from the industry side. So let's see what the audience think. And noting that this is a very complex issue, so I guess in a way polling is a little bit of a glib way of looking at it, but I think it's probably still interesting. Okay, so very, very much a mixture of responses. So it doesn't look like anyone's picked one over the other, which I guess maybe is a good thing, because it's reflecting that there is no single kind of worst way of being unethical here. But all of these things are could equally be a significant problem. So I think I kind of quite like that in terms of the spirit of this conversation. Gwilym, I think possibly, if you're happy to, I'm going to try and paraphrase Sian's 4 tests. So I think she was saying she thinks insurers should have an inventory of their algorithms. They should have some kind of a record of at least one being decommissioned at some point, information on the life cycle of a piece of data, and also to apply that to external stakeholders. I mean, I guess firstly, do you agree that that's a useful basis, particularly for looking at the ethical dimensions? And secondly, if you're happy to, you can comment on whether that's something you do at Royal London.
Sorry, just to clarify, Gwilym, before you answer, sure. This test was for people sat at board. Anybody sat around the board, including the independent or executive director, should be able to answer these 4 questions at any time, to my mind.
Okay, shall I respond? So I think that they are reasonable tests, absolutely, and certainly within Royal London, we are, like most financial services firms, we are on a journey to apply, AI and machine learning to our business. So I don't think we've quite yet got the senior piece kind of completely nailed. So I don't think we would meet all of those tests today, although I do agree that they are good tests. So what we do have in Royal London, for example, is we do have, a log of all of the models that we put into production. So we absolutely have that. We also have, master data management techniques, which allow us to track, the provenance and the lineage of data. And what we also have is a number of controls and gates that we have whenever we release a model into production. So those include, there's one gate which looks at explainability and making sure that we can explain those decisions to customers. There's a gate which is around bias. So every model that we release, we will do some analysis to determine whether we have, and at the moment, we're not as mature as we'd like to be, but at the moment we only do bias analysis for protected characteristics. So, in the UK, there are, I think, 7 different characteristics which are protected by law. So, 9. Thank you, Sean, for keeping me right. So things like gender, ethnicity, disability, sexual orientation, and so on. And obviously, some of those are difficult to do because we don't have data on people's sexual orientations, for example. But what we've been able to do in Royal London is we've developed a methodology to estimate the likelihood of somebody's characteristic based on census data, and that's actually proven quite successful. So we have, for example, determined that there are some models that we had as release candidates where we found that there was ethnic bias in that model. So that those techniques then allowed us to redevelop those models, and usually what we find is that it's some of the socio-demographic variables that we're putting into the model that are indirectly responsible for that bias. So, for example, you might have a variable which is around regionality. So, let's say urban versus rural, and obviously that will be correlated with different pockets of ethnic populations in inner city areas, for example. So we're able to detect and remove those, and we also have methods that we put in place to monitor models once they've gone into production. So if any model its efficiency dips below a certain threshold, or we see some of these biases creep in, then we can redevelop the model. So a lot of these controls are in place, but we still have a way to go to reach the kind of laudable ideals that Sean has put down there. But we're definitely getting there, right? We are definitely a proportion of the way through.
Thank you very much, Gwilym. That was really, really interesting. Great to get 2 different industry perspectives on this. But we're running reasonably short of time, which surprises me. I mean, it's stunning how much material we've covered. There's an awful lot more we could say. But I'm going to turn to John for any additional thoughts he has on regulation. John, if it's okay, I'll try and keep you to about 2.5 minutes. And if it's not too rude, I might jump in. Because we've got we've actually got a reasonable number of audience questions, which sometimes doesn't happen, but it has on this occasion. So we'd like to give you the opportunity to talk about those as well. But if you could give some thoughts from your perspective on some of the comments we've had so far, that would be great.
Sure. Yeah, thanks. And I'll do my very best to keep it limited. I'll use some analogies, I think, because I enjoy analogies. They seem to be memorable anyway. I think we're at the stage in the life cycle right now where with these tools is, again, I'm sure when the hammer was first created and early man slammed their hand with the hammer, they blamed the hammer and not the user. And I think I would argue, certainly nobody on this panel, not the engineers that are working with these tools, but I'd say back to the boardroom, we're at the point where we're blaming the hammer and not the user at this point. And so I think we're still overcoming some of that. I think Sean's questions are very, very good in terms of the boardroom discussion. Ours, the ones that I've used, I think are a little bit more rudimentary. It's what is your AI system intending to do? Where are you getting the data from? And is the AI system actually doing what it's intended to do? And can you answer those questions at the board level? I think are critically important. And then lastly, the example that was given regarding the tenant screening by Sean, I think is a critical one. Housing discrimination is illegal in the United States, and so the outcome, I would argue, is illegal. But when you're using 10 to 12 variables and coming to the same outcome, is that illegal? And I think I would argue that yes, if you're coming to the same outcome, you're essentially using a different method to get to prohibited outcome. And this gets really, really tricky in the insurance industry because by its very nature, insurance is discriminatory. But we've got laws against being unfairly discriminatory. And so when you deploy these new tools, and you can make the argument, I think there are times that some of the bad actors in the space may be using those tools to get to those unfair outcomes, but hiding under the guise of, listen, we're using acceptable tools or acceptable inputs to get to an unacceptable outcome. It's going to take some gumption on the regulator side to step in and say, we don't like this outcome. And I think it also gets back to the use case of it is, if these tools are producing unacceptable or unethical outcomes, are they really working? And I think that gets to some of the Sean's points of the use cases on this and the test cases. And this is this really working? And we still got work to do, but I'm up on my 2.5 minutes here, Nick, so I'll turn it back to you.
No, that was really great and very succinct. Thank you very much. I love the hammer analogy. So thank you for that. I think we have some time for questions. So I believe Laurent's going to try and guide us through some of the contributions from the audience. So over to you again, Laurent.
Yes, thank you, Nick. We don't have much time, but indeed there are quite a few interesting questions. Maybe I'll actually start with an easy one because there were some people in the audience, maybe some fans, Sean, who wanted to hear back your list of 4 questions that directors should know.
Okay, so question one, where is the live inventory of internal algo models used for any purpose in the firm? And by the way, I'd include HR everywhere in the firm, not just for manufacture of products. Question 2, when was the last time a model was decommissioned? So an algo was stopped. Where is the accessible? In other words, you do not have to be a programmer or a techie to understand and describe where is that accessible life cycle of one piece of customer data, from where it came from to what happens when you finished with it, or to cleanse, as I would call it. 4, how long ago, if ever, were your data suppliers audited for the above? And I'm going to add a 5th one, listening to everybody talking. And the 5th one is, when was the last time you chose not to work with, or you sacked a data provider because they weren't able to help you answer these questions for your board?
Thank you, Sean, for this extra one. Then a question which I think would be directed back at you, Leslie, from the audience. Someone stating that if one problem is model misuse, what does it then say about expertise required to use a model, especially as non-techies tend to use them? And the audience member mentions the example of screening job applicants.
Yeah, so maybe there are 2 parts to the answer, at least I would say, especially as the regulator. We have to ask the question, is the misuse happening at a technical level, right? I use these open source ML algorithms. I don't know what it is. I have unbalanced data. I just run the model, I get a result, and then I make that model and take the human out of it, and I let the model run. I think that's one dimension of misuse, and maybe that's an expertise, right? I need to make sure the people who are doing this not just are smart, but they follow certain practices that incorporate good, as I said, to me, I say good engineering or good science, plus good financial risk management practices and governance. But I think there's another dimension, which maybe it's not about expertise. I again, to me, trust and tools are the 2 things that I've learned from this panel. And for me, we really do need everyone in the company, especially the business leaders, to understand, and the board to understand how this is being used, right? So I have a model, and that model may have been technically superior. Now, I've done all the wonderful things. I've accounted for unbiasedness and et cetera, and yet I'm getting a result that does not pass the smell test when it comes to fairness, or even my value to the customer, right? A data scientist, a techie may not realize this, probably not likely. I say this as a biased class, but you need the business, right? You need the board, you need other people, and it's not really a question about expertise. Maybe it's a question of, do not be afraid of data and talking to a data scientist and being afraid of the technical language, because at the end of the day, it's just a tool. and how you use the tool and the result is really the judgment in my view that matters, not the technical brilliance of the tool, not the accuracy, whatever that means, because it's a complicated topic.
Thanks a lot, Leslie. And there were also a few questions from the audience about transparency and explainability, but I think our panelists have already given us a lot of food for thought. So instead, I wanted to get back to when we spoke about the most appropriate forms of regulation. We talked about a possible strategy, which was a prescriptive approach, for example, forbidding the use of some predictive variable, like occupation, education for the auto insurance premiums. I was wondering if the same could be argued about the algorithms themselves, because it's a kind of question that I, as a supervisor, hear a lot from firms in relation, in particular, to forthcoming AI Act from the European Commission. In other words, should some classes of algorithms be forbidden, at least within a given application scenario? And I wanted to ask John if you don't mind giving us your opinion in a few minutes, please.
Yeah, no, thank you for the question. I think that is, we are certainly getting those questions as well, or I'm certainly getting those questions as well, as can you give us a list of acceptable inputs? And that would make life so much easier for us. And I think the reality is, even with some of those, what we perceive as acceptable inputs at this point, may not be acceptable in a year from now. Credit score in the United States is a prime example. I mean, we are going through another credit score fight around the use of credit score, and depending on the state, you'll get a different answer. And so I think that may be a short-term step forward into, again, just continue the learning down the road. You're looking at the three kind of models that you've got as, I think the regulating before the technological innovation, I don't think is feasible. And so facilitating some of that innovation through some of these things like prescriptive regulations, I think is likely a step forward, because the third way, which has been done in Singapore, is very, very time intensive and very, very, it takes an awful lot of work to get everybody to coalesce around that piece. So a short answer without not really answering your question even, I think is yes, you're going to see more of that. I think you'll see more of that coming from the industry, coming from the regulators, as well as saying, can you just tell us what's acceptable, and we'll be able to move forward. And again, it's all about doing no harm. And again, it sounds really simple, but this is going to be an evolving topic. I mean, again, what is fairness? I mean, these things evolve over time, and they're going to continue to evolve. And so I think asking it goes back to somewhat what I mentioned before, where it's just give me a law, just tell me what I can do, and I'll go do it. And that all sounds well and good, and I'd love to be able to do that, but we're not there yet. And so the ask for some of these prescriptive pieces, I think, are going to be very difficult. I think there's probably some low-hanging fruit that we're going to discuss. Again, I'll go back to credit scoring in the United States, or educational background, or some of these pieces that are traditionally used in these algorithms. I think those are ripe for some discussion to move forward. But beyond that, it's going to get really, really complex and really, really difficult. And I'd argue, even with giving a list of accepted attributes, you're still going to have some outcomes, some negative outcomes. I mean, I think that's something we've all got to come to realization. But I don't know if you got anything to add on that, Laurent, but I'd also love to hear your perspective too.
No, thank you, John. Quite in line with this. Thank you. Very well stated. Thanks a lot to all panelists for these. Unfortunately, that's all the time we have for the Q&A, but I'll now leave back the floor to Nick for any closing comments. Back to you, Nick.
Great, thanks, Laurent, and thank you everyone so much for taking the time to be here today and making such interesting comments. I had started to try and put together some kind of summation, but since we have about 90 seconds left and it's been, very detailed and very variable, all I'm going to say is it just seems things move very, very quickly, and that both we as regulators and insurers will have to try and do their best to catch up in all these different areas, in terms of the risks financially and to customers, and there's a hell of a lot of work for all of us to do. But it's been absolutely fascinating. So thank you very much. And I'd also like to thank all of the audience for dialing in, for your excellent questions too. I think that's all I really wanted to say. So with that, I think we can probably close.
Thanks so much. It's been great. Thank you.
Thank you.
Thank you.